Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for November 2nd, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The ES broke down below that area of support in the prior session, the 2119 to 2120 zone, and then we saw a major stops run all the way down. A huge push all the way into 2091. Pushing actually through the 2100 to 2103.75 zone of support, but eventually closing right inside that range. It's still an important key zone to watch. While yesterday's session was an aggressive selling spree, I mean, big time sell-off, huge decline. Really, it wasn't even a 40-point range. So it's a big day in the midst of a bunch of small days. I mean, we really haven't seen much volatility, so even a 38-point day or 38-handle day seems like a big day, but it wasn't that big. I mean, this huge energy that's being created in here, once we do expansion, I mean, easily you should see a move of a couple of hundred points in one direction or the other. Not, so we have much more movement to see. This is only the tip here of whether we're about to bounce back up or are we going to fail back. This is the major pivot or fulcrum in the chart right now, 2100 to 2103.75. The bottom of this key range, the top of the August key range, here's the top of the Brexit key range. So we have a lot of important key ranges here in this zone. And if we can't hold above 2100, the next major pivot below is 1981 half, which is a significant key level in the charts over the last 2 years. So right now, still expecting, obviously we have the FOMC, Fed interest rate decision later on this afternoon. We also have Friday's big report as well. So we have some things here that could be catalysts. I think the level to watch, 2100 to 2103.75. If bulls are able to reclaim that today or perhaps tomorrow, we could see a quick reversal back toward 2120 and higher. Otherwise, failure to hold above 2100 could open up a continuation toward composite VPOC at 2069. All right, let's take a look at the intraday time frame here. Intraday time frame. This is similar to what happened in crude the previous session. I mentioned that given the significant downtrending day in crude, we'd likely see a digestion or trading range develop, and where price just digests that range. And that's kind of what we're seeing today so far in the ES. And the idea is typically to fade the edges. Anything in the middle is not doesn't offer great value. You got to be outside the previous high or low, and that offers a much better opportunity to fade price back to value. So right now, the early idea right now is just to fade the edges. You have 2107 half here, 2105. Anywhere in this zone could offer a fade back down to 2097. Same thing here, you're playing this edge and this edge, so anything into that area or a little below could be an opportunity to fade it back up and across the range until proven otherwise. Once we do see expansion from this digestion, we could get a nice move, but right now it could be further digestion. One thing to watch out for is a potential signature to develop, a reversal signature where this could be the low right here, price pops up, and now we're seeing some defense on this area right here. So that could be the area where it's bought several times before we perhaps see a liftoff in the days to come. So depending upon how this continues to play out, we have some key levels here to watch. All right, let's take a look at crude oil. Here's crude. Let's bring up this weekly pivots on the daily time frame here. So we got that right here. The previous session, we finally got our target. This right here was 52s. We rejected off that level. We talked about the rejection. I mentioned before that we had formed a potential sloping channel here with key tests at either extreme, and the fact that we were forming a range up here and perhaps that rejection coupled with that rejection could lead us right back to value. And the value zone that I talked about is 45.60 to 46.69. We reached 46.69 on the trend day down, basically digested the previous session and are now pushing lower again with 45.60 below. So this could continue seeing more weakness ahead, obviously, until we're done down here. What I've noticed at the edges of this channel is that price takes a little while to build that energy required to see that next push. So we could be down here and chop around value for the better part of a week or more before we finally actually see this thing squeeze back up or perhaps drop to significant support below. So right now, because we are at composite value and micro composite value, the expectation is we could see this thing chop around quite a bit here, a little bit, before we see some movement. We do have the CL inventories later on today that could provide some nice action and energy as well. On an intraday basis, here it is. On an intraday basis, the thing we talked about the previous session was just trending lower. The fact that we trended lower here, that downtrending move implied a trading range market, so we were looking to fade the edges, and we saw much of that play out. Late in the day, it got a little lower, then came back to value. So it was a digestion day. Now we see this thing continue lower. We've seen the previous close go off and price drop down. But for the most part, again, we're right there in that higher time frame CVPOC, MCVPOC zone, 46.69, 45.60, and we could continue to just chop that zone for quite a while. So it could be a rather difficult market here, and we have to be patient about waiting for extremes. But again, we got CL inventories, which could give us a nice breakout from the short-term range. All right, let's take a look at gold futures here. Gold is in the midst of a very bullish move up. Right when I was giving up on it, it started to push higher very nicely. So 1280 was the trick here. It really needed a couple of days. You know, it showed the rejection here, but then this digestion day held. It didn't react, and instead that hold was able to get some bears short and then show the squeeze here. So this has been a very big move. Finally, over the last day and a half here, we had a lot of sideways to up movement here. When we were talking about 52s being a great area to buy, so far that has been the best zone to buy after the rejection. It got a hair lower than that for a moment, but other than that, it's been working its way up. Now the zone to watch is going to be these previous lows right there. You have that support. That's where price went offered, and ever since it's slowly walked its way back up. So the idea would be, how does price respond when it gets up here? Are bears going to come in and defend as they have been with every single rotation lately? Every rotation has been significantly offered off this line, and it continues up here. What if we get up to that line? Is it going to come down as well? What if we get to this prior support? Are we going to fail to hold and drop? Or are bears going to be strong enough to push it back up? So the logic is basically this level right here is resistance. I think the fact that bears have taken it offered implies that bears have the upper hand in defending it to return it back down. And that could lead it even lower. If they're able to establish acceptance above 1310, the only logical zone to go to is the top of the recent price distribution, which puts you in the 1360 to 1370 zone. So that's the logic right now for GC as we head into the next few weeks. Now we take a look at the NQ now. The NQ also had a big day down. We were looking for signs that it was perhaps going to hold at 4,800 and show a rally, but instead what price did was break right through that zone, melted through the previous week's low. This is something I talked about. If price can hold below the low and then break back above it, we could see a significant rally. And we were looking for that in the trading room, and what happened instead was price broke below that low, showed the potential to squeeze, and instead remained below that level. Never once tried to really break back above. Instead, every attempt at it was basically rejected by bears, and that led to a steep continuation downward. So a big move down into the 50% expansion on the PivotBoss weekly pivots, and now we're holding off the 47.30, which is the key level. We're still in the midst of a key downtrend with lower highs day over day, lower lows day over day for the most part. And so right now, we're just trying to find the low. Where does it come in at? Where's the rejection going to be? Is this already the rejection? In that case, this would be digestion ahead of the next squeeze. Perhaps that may be the case. But again, we have Fed interest rate decision later on today. I believe NFP on Friday. So we have some things here to look forward to with regards to some catalysts. So right now we could be at a cycle low. If we are, you can see this thing is expanding a little bit like this. There definitely could be another move back toward those 49.25s that I mentioned before. it would just be from a lower launching point, which means there's more potential in the move. But we just got to watch this edge and see how it continues to develop from here and spot any potential signature that would lead us to believe that this thing will squeeze. All right, on an intraday basis, here we are. On an intraday basis right now, obviously we had the downtrending market the previous session, like crude and like what I mentioned with ES today. That typically implies some sort of digestion to come in the next session or after that trend. And that's what we're seeing. Price bounced, established a very clear key range here and dropped back to the midpoint. That's the key range to use for near-term trading right now. And the idea is likely that you're going to see digestion here. So if you come up here, you'd be looking for a move down. If it comes down here, you're looking for a move up, right? That's the goal, at least for the most part. Now you do see a bit of an absorption signature with a volume ledge forming here, so that may be the first area to watch, is keeping this low intact and then forming a signature here, which would lead to new high. And once you get that, it'll probably come down. And that's more likely what you may see develop. So right now we're looking at some sort of digestion, especially as this heads into the afternoon. And then once we see that develop, we'll likely see a decent move out of this range at some point. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.